All right, so we just noted it right there, an expectation of a month-over-month decline. A lot of different factors in there. There's the wildfires. I think there also might be some questions about companies maybe waiting for the new administration to come in before making plans for hiring and things like that. I think the question for you is, how should we read this jobs report? What's the significance of it when we're looking at the markets and also the Fed?
Well, if it comes in as expected at 169,000, that's actually right in line with a 3-month average. So that would suggest a stable labor market at a somewhat cool level. Job growth, of course, has come down over the past 2 years from giddy heights during the pandemic reopening. And the labor market is stable, but fairly sluggish right now.
All right, so you're calling it stable and sluggish. I want to ask you about the outlook for the jobs market going forward. So I'm looking at 2024. The government sector was the second biggest hirer last year. And then if you look in December, it was in number 4. As we look at some of the plans of this administration to reduce the government workforce, including reports that about 40,000 government workers have taken buyouts, how does that impact how we look at the jobs report and the impact, again, that it has on the markets and on the Fed?
Well, most of that government hiring was actually at the state and local level, and most of it was driven by the pandemic-induced population shifts to the Sun Belt states, to the mountain states. It was hiring of police officers and teachers in Nevada and Arizona and Texas, the places where people moved. And so that was faster than usual, but it was really delayed catch-up after the pandemic because the private sector raised wages and competed for workers and outcompeted the public sector for a long time until the public sector took much longer to adjust. That should normalize at some point and ease a bit. Healthcare hiring remains very, very strong. That was the #1 driver of job gains last year. Hopefully in 2025, we'll see job growth broaden out into retail, professional services, tech, and the other areas that have been suffering the last 2 years.
All right. When we're looking at the unemployment rate, that is expected to hold steady at 4.1%. But I'm looking at hourly wages year over year. That's supposed to expected to decline just very slightly from 3.9 down to 3.7. Is that something we should be paying attention to? Is this something that's giving us some indication of the direction of this job market?
Yes, it has cooled and leverage has shifted from workers back to employers somewhat. But when we survey employers at ZipRecruiter, we find that they still expect to have to keep wage growth pretty solid in the coming year. We have an aging workforce, we have immigration declining, and for demographic reasons, we have talent shortages as far as the eye can see in many, many fields. So employers are still feeling a bit of pressure. And throughout this report, I think the risk is very much to the upside.